Now that's a classic bull flag, and retail traders may in fact want to try to go long in here. That right there would cause them to go long because it's a breakout, and they would put their stop loss right below the swing low, just to the left of my most recent partial entry long. And watch what the algorithm does here. It's designed to do this very thing here. When bull flags are correct, and it's anticipating a higher run in price, it will always likely do this very thing right there. Boom, stops are engaged. So now I'm typing out that it will sharply reverse higher here based on what I'm just explained to you there. So now retail traders don't trust that bull flag because they got stopped out. They will not re-enter. They'll be too fearful to get back in. And that's why it's coded that way. Now, again, while I don't have that pink range on the chart again, just know that it can dip down just a little bit below that bottom of that highest blue rectangle. It can do that just by a little shallow little dip below that, and that's all that would be reasonable. And then higher prices would be delivered. So I'm watching price, I'm thinking to myself, okay, while I do believe that that range that was shaded in pink that I no longer have on the chart because I want to keep your attention on the very salient moments as price is being delivered, I'm thinking to myself, it might offer an institutional order flow entry, Joe. So it may need to go just a little bit lower, a couple ticks lower. I'm extending the fair value gap. And I'm just, again, reminding you that's where I'm thinking it's going to go. These are all done through TradingView live. There's none of this annotations after the fact. It's all happening real time. And you can see one of the other signatures of why I don't like trading post New York session on Wednesday is because it's like this. Okay, it's not as precise. Like I usually get in on the low candles and get on the high candles, and it's just real muddy during this particular time of the month. And I'm anticipating a likelihood of institutional order flow. So if it trades down and just touches just below that line there, I would go in with another partial and pyramid more and trust the fact that it would not collapse going lower. Okay, so that looks nice right there. You want to see that type of delivery. Again, find that in support and resistance. Your classic support and resistance taught from like John Murphy's book, Technical Analysis of the Financial Markets. It's not there, folks. It's not. And for people that trade bull flags, they're getting stopped out here. They're gone. And when a retail trader gets stopped out, it's not likely that they will re-enter.